Hi. In this class, we will go through basic ideas of startup finance. By the end of this session, you will have an idea about Introduction of Startup Finance, Pitch Presentation, Sources of Funding, Startup Financing through Venture Capital Financing. Starting a business requires money. Banks are not interested in lending money to startups because they are considered to be high risk. So, entrepreneurs often have to turn to other sources of financing, such as family and friends, or by selling assets. However, these options can be risky and may damage personal relationships. A good way to reduce the risk of failure is to quickly reach the point where outside investors are interested in the business. This can be done by bootstrapping, which means building the business using personal finances or the operating revenues of the company. Once the business is profitable, it will be easier to attract investors. In order to successfully launch a business and attract investors, it is important to have a strong business plan. The business plan should outline the company's goals, strategies, and financial projections. It is also helpful to seek advice from experienced entrepreneurs and experts. Now let's dive deeper into the topic. Let's look at the common 9 modes. Starting with personal financing. Budding entrepreneurs should save money to start a business because investors are more likely to invest in businesses that have the entrepreneur's own money invested in them. Personal credit lines. Personal credit lines are a type of financing that is available to businesses based on the entrepreneur's personal credit history. This type of financing can be a good option for businesses that do not have a strong credit history or that do not have access to other sources of financing. However, it is important to note that banks are cautious when granting personal credit lines to businesses. They will only provide this type of financing if the business has enough cash flow to repay the line of credit. Family and friends. Family and friends can be a great source of financing for businesses, but it is important to formalize the loan agreement in writing. Peer-to-peer lending. In peer-to-peer lending, individuals lend money to each other directly, without the need for a bank or other financial institution. This type of lending can be a good option for businesses that do not have access to traditional financing options. Crowdfunding. Crowdfunding is a way for entrepreneurs to raise money from a large number of people by asking for small donations. This type of financing can be a good option for businesses that do not have access to traditional financing options. Microloans. Microloans are small loans that are given to entrepreneurs at a lower interest rate than traditional bank loans. These loans can be issued by individuals or organizations that specialize in microlending. Microloans can be a good option for entrepreneurs who do not have access to traditional financing options. Vendor financing. Vendor financing is a type of financing in which a vendor, the company selling the products, lends money to a customer so that the customer can buy products from the vendor. This type of financing can be a good option for businesses that need to purchase inventory but do not have the cash on hand to do so. Purchase order financing. Purchase order financing companies provide businesses with the money they need to pay their suppliers for large orders. This allows businesses to fulfill the orders and start generating revenue, even if they don't have the cash on hand to do so. Factoring accounts receivables. Factoring accounts receivables is a way for businesses to get paid more quickly for their invoices. This can be helpful for startups that need cash flow to grow their business. Now, let's look at what is pitch presentation in startup finance.
A pitch presentation is a short and concise presentation that entrepreneurs give to investors to explain their business idea and why investors should invest in their startup. A pitch deck is a presentation that is used to support the pitch presentation and typically includes slides that cover the company's problem, solution, market, team, and financial projections.
A pitch presentation should include introduction, team, problem, solution, marketing, sales, projections or milestones. Projections should include income statement, cash flow statement and balance sheet. Competition, business model, financing. If you have a solid business idea and all the elements listed above, then you can start preparing your pitch presentation. Let's take a closer look at each point. Introduction. In the introduction, you should give a brief overview of yourself and your business. This is your opportunity to get investors interested in your company and to highlight any interesting facts or milestones that you have achieved. Team. The team section is your chance to highlight the talent and expertise of the people who are behind your business. Investors want to know that they are investing in a team that has the skills and experience to succeed. Problem. The problem section is your chance to show investors that there is a real need for your business. You need to convince them that there is a problem that your product or service can solve. Solution. The solution section is your chance to show investors that you have a unique and innovative solution to a real problem. You need to convince them that your solution is better than anything else that is currently available. Marketing, sales. The marketing and sales section is your chance to show investors that you have a clear plan for how you are going to reach your target market and sell your product or service. You need to convince them that you have the skills and experience to execute your plan. Projections or milestones. The projections or milestones section is your chance to show investors that you have a clear plan for how you are going to grow your business and achieve financial success. You need to convince them that your projections are realistic and that you have a track record of achieving your goals. Here are some specific things you can include in the projections or milestones section of your pitch presentation. Your financial projections for the next 3 to 5 years. Your milestones for the next 1 to 3 years. How you plan to achieve your milestones. The risks and challenges you face. How you plan to mitigate these risks. Competition. The competition section is your chance to show investors that you understand your market and that you have a plan for how to compete. You need to convince them that your product or service is unique and that you have a competitive advantage. Here are some specific things you can include in the competition section of your pitch presentation. A list of your competitors. A description of their products or services. How your product or service is different from theirs. Your competitive advantage. The competition section should be well researched and informative. You want to leave investors feeling confident that you understand your competitive landscape and that you have a plan for how to compete. Business model. The business model section is your chance to show investors how your company will make money. You need to convince them that your business model is sound and that you have a plan for generating revenue and making a profit. Here are some specific things you can include in the business model section of your pitch presentation. A list of your revenue streams. How you plan to price your products or services. Your customer lifetime value. Your competitive advantage in terms of your business model. The business model section should be well researched and informative. You want to leave investors feeling confident that your business model is sound and that you have a plan for generating revenue and making a profit. Here are some additional tips for the business model section of your pitch presentation. Use data and statistics to support your claims. Tell stories that illustrate your business model. Get personal and emotional about your business model. Financing. The financing section is your chance to show investors that you have a plan for raising money and that you will use the funds wisely. You need to convince them that you are a good investment and that you have the potential to generate a high return on their investment. Here are some specific things you can include in the financing section of your pitch presentation. Your current funding situation. Your fundraising goals. How you will use the funds to grow your business. Your track record of raising money. Your plans for generating a return on investment. The financing section should be well researched and informative. You want to leave investors feeling confident that you have a plan for raising money and that you will use the funds wisely. Here are some additional tips for the financing section of your pitch presentation. Use data and statistics to support your claims. Tell stories that illustrate your fundraising experience. Get personal and emotional about your fundraising goals.